This is the four sections. The very first one is going to be the market structure. This is what you're going to use to understand the trend, whether it's on the short-term perspective and the long-term perspective. So this is market structure, which you use to understand the trend on the short-term and the long-term perspective and know how to get in, whether it's a short-term trade or long-term trade. And the second one is inefficiencies, which we have already covered, but we'll cover on how you use inefficiencies as your entries and also as your exits. Then the next one we're going to cover is the Fibonacci, how you can use the Fibonacci to refine and have precise areas of interest you're taking your trades. And the last but not the least is going to be entry model and exits parameters. Then we also talk about risk management as well. Now, this is going to be quite a lot of information in 4 sessions. But I'm just trying to give you as much as possible because I don't know whether you're going to be able to pay for the next after the four sessions expire. I don't know if you're going to be able to continue. So I don't want a situation where if you don't have the funds to continue, now you're left wondering what to do.
All right, so let's see.
Yeah, so the first one we're going to focus on today is market structure, and after that, we'll now go into today's topic, which is trade execution. So we'll do market structure and how we can now use the market structure to execute trades, getting entries, right?
All right, yeah.
Awesome. So we're going to have a look at, let's have a look at USD card, for example. So now, when it comes to market structure, you need to understand two things. What is the long-term market structure? What is the short-term market structure? Example, if you look at this on the 3-month time frame, so let me use a different chart to show this because this time frame, always remember if you're looking at the long-term time frame, use FXCM. That's the best one to use. It has the longest date.
FX, yeah.
So now, if you look at this on the long-term perspective, the market structure is bearish. It was going higher high, higher low, higher high, broke structure to the downside. So price going to the upside here, it's only a matter of time. It's going to get exhausted and then continue lower, right? Long-term.
Yeah.
But now, despite the fact that the long-term perspective is bearish, this does not mean that every single a week the market is going to give us sells. There's going to be weeks the market is going to give us buys. How do you know that what you should focus on is a buy?
Exactly, yeah.
What you do is you can use the intermediate time frame market structure. Example, you can use your 4-hour time frame market structure, daily market structure, and you can also use even the weekly market structure as well to see what the trend is. For example, you can see that after the market bottomed out right here, all you need to see is a higher time frame break of structure for you to now focus on a different direction. Example,
Yeah.
you basically see that after we broke structure down here, this was the 3-month structure that we broke down, right?
Yeah.
The market was trending to the downside, consistently creating lower highs and lower lows. Right here, creating lower highs, lower lows, lower high, and a lower low until the market structure shifted on the weekly time frame. That's the
Broke it.
market giving you a telltale sign that on the short-term perspective, we're not going to be going to the downside anymore. Upside is going to be the higher probability. So all you're looking for now is where am I going to get into the market? Where am I going to get in? Now, two things you can do. You can use the Fibonacci to make it a little bit precise. I'm not going to say too much about the Fibonacci today. Next session, we'll go over that. But you can use the Fibonacci to derive your discount zone. Now, after price broke this structure above, this low now becomes your new structural low. right here.
Yeah, exactly. Yeah.
And here becomes your new structural high.
Yeah.
Now, make sure you can see that this one, it took liquidity from here. So we can just put this right here. Now, if you want to draw your Fibonacci, you're drawing it from
Bottom to up,
the low
low.
to the high. And you can see that this is your extreme premium.
Yeah. Premium zone.
Yes, and this is your equilibrium. And this is your extreme discount zone. Now, the extreme discount zone is an area where you want to massively accumulate. And most especially if you're seeing an imbalance inside the extreme premium, that is giving you a telltale sign that that is a high probability area that price could
Mm.
potentially pass from. And look right here. Can you see an imbalance right here?
Yeah,
And can you see how price tapped that position right here and used it
that's
as
imbalance.
and
Yeah.
rallied to the upside?
Yes.
Now, focusing on market structure, can you notice that after we broke structure above here, this high, price coming down here, can you notice that it is consistently creating lower highs and lower lows?
Lower heights also, yes.
So all you're looking for inside this position is for price to go from creating lower highs and lower lows to now creating a new higher high.
Higher high would be, yeah. That's the higher high.
So right here, this is a lower low, this is
Low.
lower high, this is a lower low, and then this is a higher high.
Yeah, that's it.
So the moment the structure shifts, coming back down here, you look for buys. Use this low as your stop loss. Is it making sense?
Last lower low will be our stop loss.
Yes.
Okay.
Last lower low before that structure will be your stop loss. Stop loss should be that below that low.
Okay. That
So
makes sense.
yeah, so we're gonna go through several examples on market structure, both long-term, short-term. I basically have shown you the long-term, which is bearish. Now I'm
Mm.
showing you the short-term perspective, which
Mm.
is bullish.
All right, so
Now you can see how price has consistently been going to the upside, consistently.
that's rallied.
If you go to the monthly, you can see that the monthly is also consistently creating new higher highs, higher low, higher high, higher low, higher high here, and then right here failed to create a failed to create a low below this low, and then right
Yeah.
here rallied to the upside, failed to create a new high, went to the downside, took liquidity from this low.
Yeah.
After taking liquidity, started creating another new higher high, higher lows, failed to create a higher high, failed to create a low below this previous low. Right here, failed to create a high, created a high, created a low here, created a higher high, took liquidity from all these highs. Can you see how it took liquidity
Yes.
from all these highs?
Yes. Totally. It's rallied.
After we took
So
that,
it's
after we took that liquidity, bear in mind we're still within a bullish leg. This is still a bullish low and a high. This monthly is still bullish, right?
yeah.
Now, monthly is still looking bullish. We're still within the monthly range low, monthly range high. And you're also looking at this on the weekly. We're still within the bullish weekly range low, bullish weekly range high, right?
Yes.
Now, price came down into another range, weekly range extreme discount. If you use your Fibonacci from this low to this high,
Okay.
this is your extreme discount. There's a fair value gap inside there. Coming down inside here, you can basically see that price on the daily it is still trending to the upside, creating higher highs, higher lows, higher highs, higher lows. So your focus for the time being is still going to be to look for areas of interest to buy this.
Yeah.
Look for a fair value gap to buy it. And now if you look at this price action, you can basically see that right here, if I remove all these things right here, you can see that we're still within the range low, this bullish range low, and this bullish range high on the daily time frame. So whatever the market is doing right now, all you're looking for is a fair value gap where it can come down into, and then you wait for your time frame break of structure and you buy it again. And the only fair value gap you can see right here is here,
Yes.
this one. Now, we don't know which one the market is going to use. How do we know an area that could be a high probability area for us to look for buys? You use your Fibonacci from the low to the high, the range low to the range high. And your Fibonacci is giving you that this area is equilibrium zone. That means anything below equilibrium is discount. So your focus now is inside this discount zone. Where can I buy from there? And this is where you can buy from there.
Discount zone, which area? Please kindly, can you just show me again? I mean, which to which? Like,
Can you see what I'm showing you on the screen?
yes.
Here.
So this is the fair value gap.
Yes, this is a daily fair value gap here.
Daily fair value gap, yeah.
Yes. So that's where you're interested, waiting for price to mitigate before you can start looking for any buy opportunity. Once price taps that position, you can go to 30 minutes time frame. Count 3 time frames to the left. One,
Yeah.
and wait for 30 minutes break of structure inside here for you to buy to continue higher.
Yeah. All right.
Is it making sense?
So in day one day, chart 2, we need to shift on 30 minutes.
Yes.
Yeah. To get a perfect break of structure over there, then take an entry.
Exactly.
Okay. So then the stop loss will be the same on the last lower low.
Yes, so this is what it's gonna look like. Let me show you what it's gonna look like. Now, let's say price wants to come inside that fair value gap. It's going to be creating lower highs, lower lows, lower highs, lower lows, lower high, lower low, until it's in there, and then it creates a new higher high above the previous lower high. This is a break of structure. You can
Break
now
of structure, yes.
You can now use this high here as your entry, and your stop
entry.
Loss, yes, here as your entry. And this low now can be your stop loss. 3 pips. Add 3 pips and use that as your stop loss.
And my take profit?
Your take profit, you can just target a 1:2 for now.
Yeah.
So in our last session, we're going to cover exit strategies that you're going to use. But I don't want to join too much in this session so you don't get confused.
No worries, yes. So my main theme is to like okay. So if I go to the day one, like let's just choose the day one. Yes. Okay. Day one chart. So we have to take the last, like if is it on the uptrend, so we need to take the last higher low as my lowest level to the higher high. I mean for the Fibonacci draw.
Yes. If you want to draw the Fibonacci, draw it from the last low.
Lower height.
The last high. That's
Okay,
how you follow
yes.
Fibonacci.
Okay,
Does that make sense?
yes, yes. That makes
Cool.
sense.
So now just bear in mind that the most important thing is you need to
Yeah,
understand where is the long-term trend.
yeah.
Once you understand the long-term trend, now you want to
Mm.
know where is the daily, the weekly trend.
Yeah,
So that will guide you to understand whether you should be buying or selling. If you're looking at this now, for example, and you're seeing that the 3 months is bearish, but
yes.
when you go to your monthly, you can see that your monthly is bullish. It is
Bullish,
creating
yes.
higher highs, and your weekly is bullish as well,
Yeah.
creating higher low, higher high. When you go to your
Higher.
daily, you can see that your daily on the current price action that we are in, this is the current price action. The market is consistently printing new higher highs and higher lows. So you can literally just stick to what the market is showing you right now and trade
Mm.
these buys until you see price break below a daily low. This is a
Yes,
daily
got
low.
it.
This is a daily high. If for whatever reason, let's say the market opens tomorrow or tonight
Yeah.
and then taps here and it fails and then it drops below this daily low, that means
Mm.
our focus will now be to sell USD card. This is what I mean. Let's say this candle drops and breaks below this low and closes below it on the daily time frame. Price
Mm.
coming up here, we're looking for sells for this to go
Mm.
to the downside. As long as we're bullish, I don't want to see this low violated and closed below. Any candle that runs
Yes,
below it and closes below it confirms bearish price action for me.
yes. Confirm the expression action, yes.
Yes, but if there's no such thing, then that means I am going to keep buying it until I see a daily break of structure on here. Then
Mm.
my analysis will shift from short-term bullish to that long-term bearish continuation.
All right.
Does that make sense?
Yes, definitely.
All right, awesome. So we're just going to go through more examples. And so this one was from a trade last week. And you can see that on the 4 hour, this is the range low, this is the range high on the 4 hour time frame. And you can see that all you're looking for is area of interest, inefficiency, fair value gap, price will come down into. We have a fair value gap resting right here.
Mm.
But the reason why I'm not interested in this fair value gap is because it is inside premium. I want to buy as cheap as possible, right?
Oh, premium and discount. Premium means high. In the
Yeah,
premium section, we can sell it, but discounted zone, we can buy it, right?
exactly. So it's just think about it like Amazon Black Friday.
Yeah,
When there's a discount, Amazon Black Friday, people are buying so many things they don't need. So it's
yeah,
the same with
exactly.
the market will give you a discount. The problem is most traders don't take advantage of the discount because they are scared. They think it's
Yeah.
going to go to zero. But that's the
Mm.
perfect time to buy when it's cheap.
Mm.
So you can basically see that anything above this equilibrium right here, this is the equilibrium, and anything above that equilibrium is premium. And we want to buy this as cheaply as possible. So
Mm.
all we do now is we start looking for imbalances resting from this range low to around here. And we can see that there are multiple imbalances here. We have this one, there's a very small one here, right here. Now, if we zoom in, can you see that very small imbalance below?
There's the gap between two
Yes, there's
bullish
a gap
candle.
between here and there's a gap between there. So that's already giving me a telltale sign that this area is an area of liquidity that price might want to come down into. And look how price came down in there. Now, the next thing you want to do is if you want to have a precise entry, you need to learn how to align the time frames. So when you see an imbalance on the daily, you need to ask yourself, is there any imbalance on that same position on the 4 hour, on the 1 hour? Because if you can
Okay.
spot an imbalance at that same position and price comes to that position, that imbalance, and you see a rejection and a time frame break of structure, that could be the market giving you an opportunity for buys or sells, depending on what direction the market is going.
Yeah.
Making sense?
Yes, sir.
All right, cool. So now you can see that this is discount zone is below equilibrium, and we've already tapped it, and this is a 4-hour imbalance. You can go to 1 hour time frame and look at that same area to see if there's any imbalance on 1 hour in that same area. And right here, you can basically see that the market still left another imbalance here,
Hmm.
and then right here is the second imbalance right there. And this is 1 hour. So that means price tapping this zone. I just need to see a 5 minutes break of structure, and I'm just gonna buy. And look at how price came into that position, tapped into it. You go to 5 minutes time frame. And right here, this is 5 minutes. I can see how the market structure was trending to the downside, making lower highs and lower lows. So we'll have this lower high, lower low, then we'll have a lower low, and then we'll have a lower high, and then we'll have a lower low. The price broke structure, and the structure shifted from bearish to bullish. And after it broke structure, this would be your entry. Your stop loss would be this low.
This will be here. Yeah, this so.
And rallied.
It's about like sorry. Like 80% confirmation if there is no like breakout, I mean, peak volatility in the market. So this is like confirm structure of a perfect entry or exit, right?
Yeah, so you basically have to use the structure to understand the direction,
Yeah,
and you use the inefficiency to know where you want to get in and where you
yeah,
want to get out.
yeah, got it. Yeah,
Do you have any
okay.
questions?
No, so far questions. I already understanding. I need to do some practice, and then theory. Last week I do a demo practice, so I did in gold. I applied on gold, so I made about 800.
Nice.
Yeah, just break of structure theory.
Yeah.
So it's
So,
not as the perfect theory, but tomorrow I will apply the perfect theory. As I said, like I will search on every pair. Where should I do it? Then I will apply, and I'll show you.
all right, cool. Awesome. Awesome. So now going to the topic for today, which is the trade execution model, structured and trade model, and also market structure shifts as well. Now, the first thing, let's have a look at gold. The first thing to understand is always the market structure. And going back to our analysis today, you can see that long term, this is bullish
Bullish.
into the upside, right? Now,
Yeah.
something I'm not going to say too much about this, but just to give you an overview, if you look at this weekly candle,
Mm.
this weekly candle delivered a 6% move to the
Last
up.
week, yeah.
Yes, the whole week, gold delivered 6% move towards
Yes.
upside. Now, can you see that this candle 6%? How many candles on gold has actually delivered that 6%? This one delivered 9%, and this one delivered 4%. This one delivered 3.5%.
3.57.
This one delivered 2.9, and this one delivered 2.2, and this one 2.8, and this one 4.93. So you can basically see that that's percentage of 6% in a week is on the high side.
Hmm.
So that simply means that if you were on a buy on gold from down here and you're looking at the market go up to 6% and you've not closed, you've not taken profits, the market could
Mm.
easily run reverse and take everything you've made because you have
Yes.
because the person has no understanding that there's a weekly range that gold can do.
Mm.
This is why people love crypto because crypto, as much as crypto still has its own weekly, monthly range and whatever, they they are still massively volatile.
Mm.
As much as they still do follow align with this a little bit, but they are very volatile. Anything can happen because they are very small assets and they could spike to the upside. But assets like gold, euro, USD card, these assets, they are not new. They are mature
Yeah.
markets. And the
Mm.
mature market already has percentage returns that is sustainable. If euro should do a 30% move in 1 week, it will not be sustainable. If euro should do
Okay.
30% move in one
Like
week,
as much they move, they will not sustain so much.
yes, the move will not sustain and it will just reverse and just wipe everyone out. So that's one thing to be mindful of. And you can already see the moment you're looking at this, price has delivered 8%, 6% move to the upside. All you have to do is to close your buy positions and be on the sidelines and watch what will happen eventually. Because imagine if you were on this trade and it's reversing now, it's literally taking most of your profits.
Exactly. That's true.
So now back to our analysis, market structure, higher time frame, market structure is bullish.
Yeah.
Now, when you go to daily, market structure is bullish as well. Now, when you come to the 4 hour, you can see that the market structure is not bullish, but rather it is bearish. And right here,
Bearish.
high, and right here we'll have a low, and right here we'll have another higher high, and it took liquidity. So it basically took liquidity from the previous high and then it dropped
Hmm.
and structure. So no matter how much we want to disregard this, this was a clean break of structure on the 4 hour time frame. Now bear in mind, because it's the 4 hour time frame break of structure, it's not going to be a sustainable price action for the long term. It's just going to be
Hmm.
short-term sells before a continuation to the buy side. So for buys. Now, what you can do to find out areas price might come back into for those buys is you can still go through the higher time frames and look at areas that price has opportunity to come to areas of liquidity. Example, this is liquidity.
Liquidity. Yeah.
This is a low resistance liquidity. So price can still decide that, you know what, I don't want to keep going up. I want to run out this liquidity. And it can reverse and run this liquidity before a continuation.
Hmm. Got it, sir. Gold, literally, gold is a little bit typical to understand now.
Yeah, so now if you look at this on the 4 hour, you can basically see
Hmm.
after this break of structure, price came
Hmm.
back for a retest. And when it came down, came up here to retest, still stay on that 4 hour. Can you see that this 4 hour we're looking at on this 4 hour time frame? You can see how price still was creating higher highs, higher lows,
Higher highs, lows.
higher high, higher low, and a higher high. And then all of a sudden it dropped down, breaking structure below here. And after it broke this structure, it came up for a retest. What is it retesting it into? If you go to 1 hour time frame, you can see that what is retesting into is this last up close candle. The market was trying to use this as point of interest for sales. Now, coming into this area, you don't have to just click on sell and just sell immediately. You can still wait for a 5 minutes break of structure inside here before you sell.
Oh,
Now,
inside there.
yes, inside here, around this pink zone.
Okay.
Now, why inside here? Why not here? Why not here? Why not here? The reason is number one, this is the last up close candle before a break of structure. That is a significant area that price could like come into and use it as either support or resistance. In this case, it was used as resistance zone for a continuation to the downside. I don't know if this is making sense. Now, I'll give you an example. When the market is creating higher highs and higher lows, and then it does something like this and breaks structure. This right here is your last up close candle. It is the last candle that went to the upside before dropping to break structure. So it is a point of entry. Some traders call it order blocks. Some traders call it a lot other things. But for me, I'm not really a
Part
huge.
of interest.
Huh?
It's a part of interest.
Yeah, for me, it's just a point of interest, just the same way we use a fair value gap. Because you can see that in this case, we also have a fair value gap here. And even though I'm trying to show you how you can get into this trade the with the last up close candle, you can also see that this area price also came up to that area because of that imbalance.
Yeah.
And it tapped into that imbalance. Can you see it?
Yes,
And it took liquidity.
clearly.
Can I say the two things now? The two things and the topic for today, which is liquidity grab,
Yeah.
fair value gap, liquidity
Fair value gap, yes.
gap, and a market structure shift. And this is the market structure shift here.
Smooth as butter.
So this is your market structure shift. This is your up close candle. This is your imbalance. Price came up there and used it as support and then reversed to continue lower. So all you do right here is to wait for a 5 minutes break of structure for you to sell. So if we go straight down to 5 minutes time, this is the high, this is the low, and this is a high. And right here, we went to the downside, and this is the low. Now you can see that this candle did not close below this low, so it isn't a break of structure until when price came down here. When price came down here, that was the break of structure down here. You use this low as your entry. Your stop loss will be this high, add a few extra above, and you can target just 1:2 for now. This high will be your stop loss. Add a few extra pips above it. And then look for your exits. Remember, we said you use imbalance as your entry, imbalance as your exit. So you can basically look for another imbalance to the downside. And right here, we have remnants of this imbalance here. You can literally mark that out and use it as your take profit. So whenever you see the market come to that position, you can close the position and get out. And this trade, the divided 1:5. Right here. Tapped in, went straight down to an imbalance. Tapped an imbalance up here, broke 5 minute structure, went straight down to another imbalance. Is it making sense?
Yes, sir.
So always remember that the market is going to use the imbalance both for entries and for exit. So you need to figure out which imbalances that going to be for your entries and also which one are you going to use for your exits. Now, sometimes you can also decide to use other things, other confluences like low resistance, liquidity, and all the rest of them. But I'm not going to talk about that today because I don't really want to confuse you with
No, 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 no. today that's the thing. I just want a class for entry and exit, and that's the concept. It's also in my mind before, but I just clear my concept today. Okay, I just need to draw the Fibonacci in my chart. Then
Yeah.
I'll have to take my entries. That's it, and check the the fair value gaps and all those things. That'll give me a clear picture for an entry and exit. I mean entry at least first, and exit as well. I don't know, take profit. Okay, I'll do. Let's see what happens.
Yeah. Yeah.
All right, and for tomorrow class, it's you call it 2 till 3, right?
Yeah, 2 to 3 works for me. Oh, tomorrow is Monday. All right, yeah.
Yeah, that's the.
We can do 2 to 3 on Monday.
Uh, but tomorrow I have a driving class. All of a sudden, things arrive at 3 o'clock exactly. So can you start a little bit 5 minutes earlier that I can finish
Yeah.
5 minutes earlier?
Yeah, we can start 5 minutes earlier tomorrow.
Yeah, that'll be great.
Yeah.
That'll be great. Okay. So the last the class you took yesterday, right? 5 a.m.
Yeah.
5 p.m. Sorry, 5 p.m. Sorry.
Yeah.
And the recorded classes under there. So what was the topic?
Yes. So the next topic we're gonna cover in our next session is gonna be, let me go to,
Should be lot size, money management, position sizing step by step, how to stop blowing account.
yeah.
That's the thing.
So
Yeah, money
here,
management.
risk management. So what we would do is we'll talk about risk management and I'll show you how you can manage your risk. And
Yeah,
then I'll just add one of these other topics here in there.
yeah,
So you can just be on track. So I'll add one
yeah.
of
All
the
right, sir.
topics there, then we'll still go through that as well.
All
So
right, sir.
yeah. Yeah. So far, I don't know. Do you have any questions based on what we've talked about?
Today's topic, no, there is no question because I
Oh,
follow this structure. I follow your structure, whatever. I have to just draw the Fibonacci and to execute my trick. That's the thing. It's basically from the last low to till last high. I have to draw my Fibonacci as per the screenshot I took last the setting you gave me as per that the setting from here to there. That's it.
all right, perfect.
Yeah.
Yeah. So before, I don't know if you're in a hurry to go.
No, sir. No worries.
All right, cool. So I just want to show you another example, and then I'll
Yes,
just
please. No
um.
worries.
So this right here, I'll just take everything off for 1 minute. Or you know what? Let me just use a different chart instead of deleting this. Now, this is an example, and you can see, always remember the first thing you want to do is understand where the long term is going before anything else.
Hmm.
Long term in this case is bullish,
Yeah.
right? Once you
Yeah.
figure
Still bullish.
once you figure that out, the next thing now is to understand the short-term perspective. Where is the market going to? And on the short-term perspective, you can basically see that the market was trending to the downside,
Hmm.
creating
Lower high.
this lower low,
Low
lower
low.
high, lower low, and then run,
Yes.
and it broke structure.
Break the structure here.
Now, can you remember what I was talking about previously, just now, where I said the last up close candle, which was the last candle that moved towards the opposite direction before breaking structure? Now, can you see
Yes.
we have a similar thing here?
So, yes, definitely.
This was the area price moved to the opposite direction and went down before rallying. This is a point of
Yeah.
interest. Price can come to this position.
Yeah.
That's the exact same thing that happened to the previous last up close candle is the same thing that happened to this one. It came there and it took liquidity from there. If we go to that analysis that I just showed you now, I think it was on gold, if I'm not mistaken.
Yeah. Yes, yes, gold.
You can see that on gold, this was the last up close candle before breaking structure. And can you see that price came and took liquidity from the high, which is the same exact thing that happened here.
In reverse.
Yes, but this one is in reverse because this one we're looking for buys. In the other one, we're looking for
Yeah. This one looking for sell. Yeah.
for gold, we're looking for sells, but for this one, we're looking for buys. So you can see how it came down and it took liquidity.
Ethereum, yes.
Why did it take liquidity?
Yeah.
The reason is because there are some traders, because this is also an order block. Some traders,
Mm.
how they'll take a trade from this position, they will place their entry here and they will place their stop loss here.
Mm.
And then the
One
market
extra two.
just take their stop loss and reverse on them and hit their take profit.
Mm.
And now they are crying, oh, it just took my stop loss and went to my take profit.
That's it. Oh my goodness, yes. So that's why you just make some gap on it.
Yeah, so that is the reason why you don't place any limit order here when you haven't seen that the lower time frame is
Mm.
showing you where it wants to go. If the lower
Mm.
time frame is not telling you now I want to go higher, then you shouldn't be buying.
Yes,
That is the most important part of today's session. The market
yes,
structure or higher time frame, the lower time frame. Despite
exactly.
the higher time frame says bearish, if you go to the
Mm.
lower time frame and you are not seeing
It could
confirmation
be.
bearish,
That's it.
sell.
No,
You need to see
nothing to do.
confirmation.
Yeah, I see the confirmation. Yes.
So once you see the confirmation from the lower time frame that it
Mm.
is aligning with the higher time frame, now you want to take your trade.
Okay. So basically, the thing is, if I see like it's a monthly chart. So if I see the weekly chart, and if I find a fair gap between this, and I have to shift over from weekly to 1 hour, then I'll have to find a fair value gap again. If they mitigate, then we should from the point of interest, we need to start our trade.
Yes. So now, depending on how precise you want to have your entry,
Yes.
if the weekly, if
Yeah.
your weekly is bullish,
Yeah.
and now
Yeah.
you're going down to your 4 hour, your daily, and you're seeing that your 4 hour, your daily, your 1 hour, they are not bullish yet. They are bearish, right?
Yeah. Yeah.
Lower time frame is bearish.
Bearish.
What you want to see is for that lower time frame 1 hour to go from
Yeah.
bearish to now bullish. Once that one
Yeah.
hour starts aligning with that weekly, that's when you want to start looking for the buys.
Okay. Yes. Yeah. That makes sense.
Cool. Now,
Definitely, that makes sense.
using this as an example, you can see
Yeah.
that as much as the 3 month time frame is bullish and the
Hmm.
6 months time frame is bullish and the
Yeah.
12 month time frame is bullish. When we go to the monthly, right here, we're looking at just this previous price action from here. If we look at this, you
It's
can see
bearish.
that bearish monthly. Despite the fact
Literally.
that 3 months, 6 months,
Hmm.
12 months are bullish. Monthly is bearish, creating lower high,
Hmm.
lower low, lower high, lower low, right?
Yeah. Yes.
Until we now all of a sudden saw the monthly now eventually rally to the upside to break that bearish price action. The moment
Yeah.
the monthly rallied and broke above this previous lower high, that's when we're like, yes, we think this market is now priming and ready to rally. So we
Yeah.
now start looking for an area the market will come back to for us to start looking
Hmm.
by it.
Exactly.
That's when you now mark your fair value gap and your last up close candle and your last down close candles. This here is the last down close candle. The one I marked in gold is your last up close candles. I don't know if it's making sense.
Definitely, it makes sense.
This is your
Definitely.
break structure.
Yeah. That's my bullish because it's not break the structure of the last below candle, so it's going high. It's break my lower high and it's go up.
Yeah. So the moment you're looking at this and you're seeing that price has broken structure, it has closed above. Now you're looking for confluences and areas where you want to buy from. You mark this area, this is your point of interest where you want to buy from. Now, when price comes into this position, you don't just jump in immediately and say, oh, I'm buying right now. What you do is you go to the 4 hour time frame because this is monthly. So you count 3 time frames to the left. 1, 2, 3. You want to see a 4 hour break of structure to the
Break of
upside
structure.
for you to now confirm that this market wants to go higher and you start looking for buys. And can you see that area? This is that area we marked out. Can you see how price was coming into that position, creating lower highs and lower lows right here, creating a lower
Yes,
high,
yes.
lower low, lower high, a lower low, a lower high, a lower low, and then it rallied and broke structure to the upside, confirming that it wants to now go to the upside. So price coming down here, you are buying. Your stop loss below this low. Add a few extra pips below. So let's say this low is here. Your stop loss should be just below that low. 3 pips, 5 pips below this low. This is your entry. And look at your trade. And you can see this sort of trade.
Yeah.
And right there, you can see how price. So you can basically see how what you want is understand the long-term direction. Now, wait for areas of interest to flow with the market, to change to align. You want the lower time frame to align with that long-term direction. Make sense?
Yes. Yes, sir. Yes, sir. Totally.
So let me
So
see.
is it,
Yeah, ask
yeah.
a question.
The thing is, my take profit, if you did a buy, then my take profit I can take until I can move my stop loss to the break-even point if it go up, and I can increase my take profit until it's not break of structure anywhere.
I wouldn't recommend you do that because what it will do,
Yeah, obviously I don't want to do that, but
yeah,
just as a say.
yeah. So what I would recommend is go to a higher time frame and look for fair value gaps and use it as
That's
take
it.
example. You can see this is a fair value gap. This is another fair value gap. You mark them out and use it as your take profits. And you can see how price went straight to that fair value gap. You can see that, right?
Simple. In one word, yes, the fair value gap from the
Went straight
yes.
there. So that's why you use the fair value gap as your take profit position and wait inside there. Once price is in there, you want to close the trade and take your money and leave.
That's it. All right, sir.
So if there's anything at all you don't understand, just feel free to always let me know. Now,
Yeah, I will text you instantly. Yeah.
yeah, so this is current price action now. You can see that this is dumping hard, right? It is dropping drastically, a whole lot.
Yes.
Anyone looking at this right now will say, yeah, we're bearish. I think this is bearish. But remember that we still remain bullish. 12 months, we are bullish.
Bullish.
12 months,
Yeah.
bullish. We go on the 6 months. This is
That's bullish.
go on the
Full
3 months.
bullish.
This is bullish. Very
Yes.
bullish. When we take this to the monthly time frame to look at what it looks like on the monthly, remember that on the monthly, it was trending to the downside, creating
Yeah.
lower highs, lower lows until it broke structure here. And after breaking that
Huh.
structure, it came down, retested right here.
Hmm.
Then
Yeah.
I created this low, came down here, came up here, and it broke structure again. So price
Hmm.
coming down here, all we're looking for is, what are we looking for? Price to come into for us to look for buys.
Nice. Yeah.
What are we going to be looking for to use?
Looking for the the lower low.
So now price has broken structure here, right?
Yes,
Coming
yes, yeah.
down to the test. What are we
Now we're
going?
looking for buy.
We're looking for buys from what kind of area?
Our interest area will be the last fair value gap.
Exactly. The fair
Yeah,
value gap right there.
yeah.
You mark it
Yes, yes,
out.
yes. That's there. Yes, exactly.
Now
Exactly.
you
That's the that's
now
the
you marked it out. Once price is
yeah.
inside here, what are you looking for you to start looking for that buy? What do
For
you
buy.
what time frame breakout structure do you want to see for you to buy?
4 hour.
Exactly, the 4 hour. So you literally just go straight down to 4 hour. This is current market analysis. I'm using
Yeah.
current market right now.
Yes, sir.
Look at the 4 hour time frame. Look at how the 4 hour
Yeah.
time is creating lower lows, lower highs, lower highs, lower lows, creating all these structures here, created a new lower low, created a new lower high, created a new lower low. So all you're doing
Yeah.
now is mark the lower highs and trail price. Keep marking the lower
Yeah.
high. Once it breaks the lower high, that is the market giving you a signal
Yeah. Yeah. Okay.
that it's time for you to look for a buy.
Hmm.
C'est fini.
Yes, that makes sense.
Once you see this, you just want to see this and you buy. Your stop
Yeah,
loss,
that's it.
your stop loss will
Stop
be
loss should be here. Yeah.
you break above here, you want to see a retest and you buy. And you put your stop
Hmm.
loss below here, like this. Your entry will be somewhere here, inside here. Then your targets, you go to a higher time frame, daily. Look for fair value gaps on the daily where you will mark them out and you can now use those fair value gaps as your take profit one, take profit two, take profit three. It's up to you how many take profits you want to have.
Yes, now I understand why people say 1, 2, 3. Now this is makes sense for me why it's 1, 2, 3. I'm laughing at something. Why is take profit 1, 2, 2, take profit 3? That makes sense now to me.
This is it. Your take profit one here, take profit two here, take profit three here, and you leave the market and let the market do whatever it wants to do.
Yeah, that's it. Just need to move this but like stop loss into the break-even point.
Exactly.
Yeah.
So does it make a lot more sense today more than previous times?
This is Odi. This is good. This is really what I want.
Awesome. So what I usually recommend is after our session, when you have
Mm.
time, rewatch the videos, rewatch the recorded session.
Yes, yes.
It will help you. And when you watch it again, like I had one guy in my mentorship, the guy, he's been with me for a year. He's a profitable trader. He's making money on his own. He
All
doesn't
right.
do my sessions anymore. The reason why he still pays for it is because just 1 week trading, he makes the money and he loves the conversation. How he has someone he can
He
ask questions and anything,
yeah.
or we can just have a look at it and stuff like that. So what am I even getting at with this discussion? Yeah, so the guy,
Hmm.
I don't even remember what made me talk about this now. Um, so basically, the guy, he's a profitable trader, he's making money on his own, and we just go through things like this, and he will show me what he's looking at areas he wants to get in, areas where he wants to get out, and we'll reanalyze it. And I'll still give him my own thought process. And sometimes he might want to take multiple trades that move oppositely correlated to each other. And one thing I tell him is it's better to choose one because you are overexposing yourself to more risk. Because if one of
Yes,
them fail, they both fail.
that's it.
And sometimes he wants to trade Bitcoin and Ethereum at the same time because he's seeing that a trade is maturing in Bitcoin, maturing in Ethereum. I'm like, no, don't do it. Take either Bitcoin
No,
or take Ethereum. Choose one. Don't take two. So